President Trump is posting aggressively before the Monday open to stabilize a narrative that is slipping as the Trump trade loses steam. On Monday, March 23rd at 7:23 a.m. Eastern Time, Trump posted that the United States of America and the country of Iran have had, over the last 2 days, very good and productive conversations regarding a complete and total resolution. Crypto markets proceeded to rally $130 billion, which led to a sell-off into the weekend, completely erasing those gains. And like clockwork, again, on Monday, March 30th, just a week later and a few minutes off at 7:26 a.m. Eastern Time, Trump posted, "The United States of America is in serious discussions with a new and more reasonable regime to end our military operations in Iran, and that great progress has been made." Again, crypto markets rallied a little over $100 billion, and those gains have yet again been wiped out into the end of the week. But in both of these situations, not only did we see new lower highs, but less steam in each rally, which signals that markets aren't buying this news or information, and it's likely they still want out of the crypto market for this foreseeable future. It's also beginning to look more likely that Trump is doing damage control and using these posts to prop markets up. As we know, Trump focuses heavily on markets, and with the S&P 500 continuing to print new lows, with a high likelihood that we also see new higher highs on inflation to upwards of 3.5 to 5% this year, Trump is racing against the clock. But still, it seems he's losing credibility among markets with weaker subsequent rallies. And according to Fox News, a media outlet which tends to paint Trump in a more positive light, reported that 42% support the current U.S. military action against Iran, and 58% oppose it, including nearly 4 in 10 people who are strongly opposed. And it seems this market chaos has seeped into administrative chaos, marked by a revolving door of cabinet case in high-profile resignations plus firings, from the most recent Attorney General Pam Bondi to Christy Noel, head of the DHS, who is also fired, to crypto and AI czar David Sachs leaving his role, and even Joe Kent, the former counterterrorism chief, resigning from his post and is now being investigated for alleged classified leaks. And whatever you might believe about all of these individuals, their motives, and their politics, what's really gone on over at the White House, we can be assured that one thing is certain: markets don't like the uncertainty, and it's showing up in the price as the stock market and crypto markets continue to sell off. And this is creating a period of high stakes volatility that is spooking institutional investors who rely on consistency. These radical shifts in the executive branch are gapping markets down at the open and forcing aggressive sell-offs into the weekends as players de-risk. This uncertainty is pulling cash out of the system, which means your XRP and stocks don't have the fuel for the liquidity that is actually needed to grow. And the Clarity Act is now facing a brutal April deadline that they can't afford to make any amendments to, because now it extended it past May. In other words, if the Senate doesn't move, crypto legislation is likely dead until 2028. And the big banks are actually wanting this. They're lobbying to ban you from earning interest on stablecoins because they are going to lose billions in deposits. So I will show you how this legislative Hail Mary decides which assets the SEC can touch, and why the friction in DC is draining the liquidity right out of your portfolio. And before we break down what's really going on in the markets and what will happen next with XRP as we enter this Senate markup hearing, if you've been looking for a way to exit the failing legacy financial system and take back full control over your money and autonomy with no intermediary or permission from some bigwig at a bank, then go ahead and check out our STS blueprint at that very first link in the description below for accelerator.altcoinpro.com, where we share with you the exact DeFi yield strategies that big banks are fighting to make illegal. This system is vetted by pros and is a safe entry even if you've never done DeFi or you're just starting. You can earn a conservative 8 to 14% APR APR on any stablecoins or crypto that you have, with an average of 24% across all the pools that we share. Some of the more aggressive strategies are upwards of 62%, but you're still going to want to rotate. Now, these banks are fighting this market structure bill because they fear losing those trillions in business, but this is your chance for true independence and to secure your family's future. So be sure to check out that very first link in the description below. And as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners YouTube channel. If you're new here, my name is Paul. You can find me on Twitter or X at CryptoPaul. As much as Trump has consistently been stating that we are going to be either de-escalating or leaving Iran, that is not actually what is currently occurring, because on March 31st, Trump said the U.S. will have nothing to do with what happens to the Strait of Hormuz and that we will be withdrawing within 2 to 3 weeks. However, in that exact same time frame, the U.S. deployed a third aircraft carrier to the Middle East, and by all estimates, it would take between 8 to 10 months for this aircraft carrier to make it back onto U.S. soil, according to history, or I guess I should say, into U.S. territory and waters. And so most of these tweets or posts from Donald Trump seem to be more damage control, as we stated earlier in the video. Right on Monday, before market opened, within 3 minutes of each other, each week, Donald Trump essentially made a very positive statement surrounding the war in Iran, whether it's productive talks or complete resolution. However, markets don't seem to be buying it because they continue to sell off and have weaker rallies. And de-escalation doesn't typically look like damaging a bridge that is currently used by civilians over in Iran. As just this morning, Trump posted that the biggest bridge in Iran came tumbling down and that they need to make a deal before it's too late. Now, contrary to what this may sound like, this isn't me being hypercritical. I'm simply looking at the facts of what he said and what has occurred. If positive peace negotiations and talks were actually occurring, you wouldn't be bombing a bridge. And so because there is so much incongruence between statements and what is actually done, I believe this is why markets are selling off and why oil continues to rise, with Brent now sitting at over $112. And Trump knows this. He knows his economy is on the line. He probably has some of the best economic advisors and counselors sitting at the table telling him, hey, if oil gets out of hand and markets continue to dump and things escalate in Iran, which already we're at a point of no return, this is going to damage Republicans and your ability to get things done at the midterms. So it was too late to de-escalate because they look weak, and now it's beginning to seem too late to save inflation and the oil crisis leading into the midterms. In other words, when markets have flashed danger, Trump has been quick with a social media post or a remark to claim the war he has launched last month could soon end. He publicly declared that markets are doing better than he expected. Even the S&P 500 declined over the past 5 weeks, and the global oil benchmark is up roughly 60%. Hence why many analysts are now calling this the taco trade. This is essentially an indicator tracking Trump and his change of course. Now, taco stands for Trump always chickens out. And essentially what this means is he's been pretty back and forth, typically using tariffs in earlier days for negotiating leverage. But when you back down over and over and over again or extend periods of this time, people stop believing you. It's kind of like the boy cried wolf. And in markets don't know how to respond and react, consistently trading extremely volatile through those periods of time. In other words, this taco indicator is actually quite interesting because it tracks the 1 month change in 4 things Trump is thought to care most about: the S&P 500, inflation expectations, his approval rating, and the 10-year Treasury yield, probably the most important of the bunch when weighted in actual terms versus Trump terms. But Trump still has the power to sway markets, and he knows this, hence why he's making these posts. The idea here, though, is pretty straightforward. When all 4 start flashing red, the pressure builds and the odds of a pivot go up. And so with the Strait of Hormuz causing a severe energy crisis that is worse than 73 to 74 and 78 to 79 combined, which led to record inflation and a very tight Fed, Donald Trump also knows this, hence his messaging around withdrawing, which puts the Fed in an extremely difficult position and in a dilemma. Powell did talk about how he's going to take the data as it comes, which he always does. In his statements, he's been really consistent about that target of 2% inflation. about keeping unemployment low. But the dilemma here is that the energy shock can simultaneously push prices higher and drag down economic growth by squeezing household budgets and raising costs for businesses, which means the markets have priced in the fact that we are not going to get a rate cut now in 2026 at all. And we could potentially be getting a rate increases, which would further put a stranglehold on the economy and cause steeper sell offs in crypto as more investors look for liquidity. And so, this energy crisis just isn't conjecture. It's not just a bunch of fear mongering. This is very real, and it's arguably one of the worst in history. For example, Rory Johnston, who is an oil market researcher and a former bank economist, shared a helpful map from JP Morgan highlighting the timelines upon which most deliveries of oil through Hormuz, which produces 20% of the world's oil, will stop flowing into certain regions. And when you look at this map, it looks like April 15th is where the most deliveries will stop and end from the Strait of Hormuz. Over in Australia to New Zealand, you have April 20th. But in most other regions, we're talking April 10th, April 1st, and so on. So we're not fully feeling the effects just yet, and most of the globe won't until the end of this month. Either way, it's safe to say we are going to see higher inflation. And a negative reading in already a very skittish market will lead to some steep sell-offs. And so this is all coming to a T as we're also facing an uphill battle on the crypto market structure deal. Consistently, Coinbase has resisted. The banks have resisted. Nobody wants to play ball. And so the Senate is struggling to figure out what works for everyone because there has been a lot of lobbying power on both sides. And so recently we saw the head attorney over at Coinbase, Paul Grewal, live on Fox. And so I won't bore you with the video, but I will read portions of the transcript where the host Maria basically said, I believed, and many did, that we were going to have a resolution this past fall in 2025. This has gone on much longer. And so when we talk about this upcoming 48-hour time frame, do you really believe that we're going to have a resolution in 48 hours after all of this? To which the chief legal officer wrote or stated, I'm very confident that we're going to see progress. And the reason is that we need to finish the job. It's true the Genius Act passed last year and was a watershed moment for crypto and the crypto economy. And like in true fashion, whether they're a politician or a lawyer, he completely sidestepped the question and continued on with another good point. In other words, it's extremely unlikely this thing is going to pass in 48 hours, and then the clock is running out because May tends to be a very poor month for crypto in general. As the old saying goes, sell in A and look away. Most fund managers and institutions tend to sell their assets even in a bull market or portions of those rich on asset classes in order to take a summer break because the summer lull is very real. Markets tend not to do well or just trade within a range for a long period of time. What happens when that comes in? When it may aligns with a very bearish market environment, alongside the fact that this market structure bill still hasn't been passed potentially into the midterms. And if it's not done in the next 6 weeks, it's likely off the table until 2028. In other words, the stablecoin yield inside of the market structure bill will not be released this week as planned because of fears it could give opponents an opening to stall the bill before the Senate markup. In layman's terms, they really can't change much and are worried about doing that because a stall gives the Democrats more power and the banks more power to get what they want out of this bill. And so in this market pulse report I put together for our Altcoin Pro University, which you can get access to as a member, I did a deep analysis into what all of this actually means. And if clarity fails, probably by May, then every regulatory win of the last year becomes reversible. The 16 asset commodity classification is interpretive guidance by the CFTC and the SEC. However, it is not law. A future SEC chair can reinterpret it. The stablecoin framework exists under the Genius Act, but without the market structure bill to sit inside. Institutional capital stays cautious. Republicans are projected to lose seats in the November midterms, meaning the next Congress will have less crypto-friendly composition. A realistic timeline for the second attempt, by all measures, would be sometime in 2028 earliest. Hence why David Sachs warned against this exact situation of regulation by discretion before he departed his post as crypto and AI czar. Stated another way, everything built over the last year hangs on the next 6 weeks. And this is exactly what big institutions and the biggest players are waiting for. They're not waiting for guidance or interpretations from the SEC or the CFTC. They're looking for clear guidelines and rules signed into law before they fully adopt. Because if they put in all of the groundwork and spend all of the money to adopt crypto and offer it to their clients, only to then have it walked back or reinterpreted by the next administration or the next leader over at the SEC, things would be really bad. So this is really freaking important. And Ripple CEO Brad Garlinghouse knows this, which is why he has not been fighting against the current amendments inside of that bill, like Coinbase CEO Brian Armstrong, stating over and over and over again he's fully in support and just wants to get it done, stating, let's not let perfect be the enemy of good, and that he wants clarity over chaos. But let me know what your thoughts are down in the description below. And ultimately, I want you to begin to prepare for a bit more volatility. It's likely we're going to continue to see downside, and you would have known this and been prepared for it if you would have joined me on my technical analysis Tuesday call I host every single Tuesday for our community over at Altcoin Pro. Many of them not only hedged, but took short positions, and now they're way up on those positions. And so all you need to do to join us is go to altcoinpro.com in order to join. And finally, if you want to join us at one of the biggest crypto conferences of the year in Las Vegas, which is going to happen April 27th through the 29th, then be sure to check out that link for Bitcoin 2026 down in our description below. And when you check out using the code BULLRUNNERS, you get 10% off your purchase price. And the price does increase in a single day now. So be sure to check that out ASAP if this has been on your radar and aligned with your schedule. But that is it for the video, folks. If you enjoyed the video, be sure to subscribe to the channel, and I will see you in the next video. Goodbye.